right, everybody. Happy Tuesday. How's it going out there? You guys having a good day yet? One of these days we'll be able to say that. Yeah, we're having a good day. All right, welcome to our show. It's called The Closing Beat. We're financial advisors here at Jazz Wealth, and this is just a quick show that we put together every day to go over the stock markets, the good, the bad, and the ugly. We're also playing a game. It's called Guess the Dow. You're welcome to take a shot there. jazzwealth.com/guess the Dow. You don't have to be a customer to participate. Tell me where you think the Dow is going to close next week. If you're the closest without going over, we'll send you a $100 gift card, or you can credit it towards your account if you'd like, if you're one of our customers. This week's Wine and Wealth class, we're actually going to do kind of a free-for-all. We're going to do a little bit of a question and answer series where if you're watching live or if you have questions you want me to answer, if you're one of our customers, we will be doing that in addition to covering some stats and things like that. So it's not really going to have a focused topic. We're kind of just going to be a current event class. So we can go over everything we're doing here, everything that's going on out there. So that'll be Thursday at 8 o'clock if you're one of our customers live in the dojo. Your Jazz Artist of the Week is Oscar Peterson, amazing piano player from way back in the day. He's got a song called Night Train. It's also the name of the album, by the way, if you're interested in that. Really cool, man. Just a nice laid-back song. You know, you go sit in your nice little leather wingback chair somewhere, have a glass of scotch or whatever, and just chill. You know, just forget the day has happened there. Anyways, hope you'll check that out there. Also, great job to our customers. I don't mind the emails. Bring them on. I don't mind working. I don't mind staying here until I get things done. You guys have taken our 4 tips for our customers. You're going nuts. I love that you guys are actually doing this and getting to work on that. It fires me up. So if you're still working on that and need help, all those things, of course, let me know. I'm happy to help. I also put those in last week's email as well. Hey, let's talk about the stock market today. You got 1,000 points. I mean, I'm so used to saying 2,000 points. You got 1,000 points on the Dow to the upside. A lot of that was sort of mid to late day there. You got the S&P 142 points, and the NASDAQ added 430 points on the day. Here's the thing, though. I don't look at this rally today and say, oh, awesome, we're bouncing. I've got a hint of skepticism with this rally here. It was a very calm day, by the way. If you look at the S&P 500, the range was much smaller than what we've seen. Could be the sign of a bottom. I don't know yet. I mean, it's too soon to say that. But the overall range and volatility today was a lot lower than we've been seeing there. In fact, if you look at volatility, it was down on the day, right? So even though it was a bigger range, today the volatility was down. By the way, that high right there, that's the highest since the financial crisis, if you're wondering how wild things are getting out there. I kind of taken the approach here, let's not assume this is a bottom because it was very defensive in nature. All of the defensive areas of the S&P 500 really helped support the day today, and I'm going to be talking about that there a little bit later. Also, the stock market is very clearly and obviously in a mode of we need stimulus from the White House, or from Washington, I should say. We need to see a decline in the number of cases, new cases of the coronavirus or COVID-19. That's what clearly the algorithms are waiting for. And we kind of saw that today as Washington was getting more specific about their plans there. That's what everybody's waiting for any significant buying opportunity. In the meantime, people are playing defensive. We'll cover that with the sectors there. So we'll see. I mean, it's just plain as day to me how the markets are waiting for one of those two things. It looks like the stimulus is going to come out first. The White House started the day by talking about stimulus. They were thinking $250 billion in what's called direct payments, which just means they're going to send you a check, bottom line. I mean, there's nothing else to say about that. By the end of the day, that number was raised to $550 billion. I don't know if they're just pulling numbers out of a hat here, but that was reported as well. Interestingly, I was telling my daughter about that, and I said, what do you think about that? Do you think that's right or wrong, that when the economy gets a little weak, that they just hand out checks to people? And she's heartless, man. She was heartless. I'm not saying I agree or disagree. It was just, she was like, no, people should save their money, right? Like, she went right for it. And she's 19, so she enjoys a good debate out there. Let's just say, if you have a teenager, you know what I'm talking about. Anyways, you also had bailout talks today for the first time in the airline space. They're already looking for bailouts. Delta and American, I think, were the two that we're looking at. And I sort of disagree with that in a way. If you can afford to buy back shares, which drives up your share price, then you can afford to weather a downturn. You don't need a bailout, but that's my opinion on that one. I don't mean to get into that. Anyway, so you got the S&P kind of a muted day, we'll call it, which is odd to say that because obviously it was a great day to the upside. Any normal market, we would consider this a massive rally. But with what we have right now, not very impressive, I think, in terms of trying to convince people this is a bottom. The Russell 2000 actually beat the S&P today, the best gain out of all the major indices there. The Dow was the weakest. That's going to be Boeing related there. One negative economic number today that sort of made people a little nervous was retail sales. They came in weaker than expected, and that's before the virus. So that data was prior to us knowing about this virus in kind of an extreme way like this. So that's not good news that retail sales were already softening going into what's happening here. I did pull up a chart here to show you. Here is the U.S. Retail sales month over month. This decline right in here is for January, right? So the fact that we're already getting weaker prior to all of what we could understandably call weakness right now, it's a little bit worrisome there. But anyways, we got a lot to cover, so let's move on here. In the Dow, you've got ticker symbol DOW, your best performer today, 20% to the upside there. Intel did well today. The sort of semiconductors, tech did well, stood out. A couple names really stood out in there. Intel was one of them. Walmart did well despite the soft retail sales. Oppenheimer upgraded the stock. The stock is almost positive now since the start of the coronavirus there. So that was pretty impressive there. Boeing. Weakness to the downside there, obviously hitting new lows, losing 4% on the day. Their debt rating was downgraded on the day. They called cash flows the main issue there. Boeing has already reached out to the government. They're looking for assistance there. And Trump said, tweeted, I believe today, that they do want to help out Boeing. So, I mean, I don't know where that lands, but that was in the news there. So Boeing hitting new fresh lows. McDonald's weak on the day. Restaurants are basically saying you can't dine in anymore. You could take it to go. Some of them not even allowing you to take it to go, but restaurants closing everywhere. All in this area here, pretty much restaurants are closed. So McDonald's taking a bit of a hit there. It did close well off of its lows. And you're going to see a lot more of this, by the way. If you see stocks selling off as aggressively as they are, you're getting too extended here. You have people that are stepping up now and saying, that's ridiculous. They just dive in and buy that there. Disney would be one of them. So Disney weak on the day. One of the weaker ones in the S&P today, or in the Dow, I'm sorry. Disney at this point, $93.50, trading at 2 times price to sales. So let's go in here, look at Disney. I'm going to pull up price to sales real quick if I can. Yeah, there you go. So this is a 3-year look back here. We're at 2.1 times price to sales. That is incredible. I think they do, what, $74 billion or so in sales. I don't have that for you. But let's take a look. Let's just zoom out as far as we can go here. Look at the current valuation price to sales anyways, and go all the way back and go, what kind of a discount am I getting here on a fundamental basis? You got 2012, 8-year discount for Disney. I think that's ridiculous, to be honest with you. I wanted to point that out. I'm not telling you to buy the stock or anything. I'm just showing you that's how things are getting out there, where things are so severely discounted, not just on price. You're looking at price, but everybody else is looking at valuation as well. I get it. The theme parks are closed, and this is obviously a unique situation, but still, I thought that was impressive. All right, in the S&P 500. You've got a utility here, Ameren, up 17%, is one of your better performers in the S&P today. Well, utilities as a whole ranked up there. Look at Con Edison. Con Edison going from $81 to $93 all in one day. $14. This stock does not move $14. One of our customers works for them, and it's normally a slow and steady stock. For it to go $14 in one day is incredible. That's a defensive move. That's not that something magical happened here. I'm looking through the news there. This is the largest percent increase since 1972 today. An 18% gain, the largest since 1972. It's just incredible what you have. Moody's cut the rating there on it. All in all, nothing impressive to report today other than the sector itself did really well. We'll cover that here in just a moment. Yeah, that's basically all I have there. On the downside for the S&P 500, you got energy names. You got things like Apache down another 18%. Can't afford the 18%, but got another 18% to the downside. Noble Energy downgraded like 3 or 4 different times. I just got tired of looking at all of them. There were so many downgrades on this one today. And one other name, restaurant name, Darden. Plummeting here. Their restaurants are closed, right? I mean, that's the end of the day for now. So nobody going out, people already stopping going out to eat, and now most places, they're asking you to close. Darden Restaurants has a host of different brands in there, so that stands out. Let's go to your sector performance, and to start the sector performance, I'm going to run back over here, see how this looks if I pull it up. Not too bad. Here is your sector year-to-date change breakdown. So we're taking the year-to-date, not from 52-week highs. Remember last week I did 52-week highs, so the pullback from 52-week highs. I'm actually taking year-to-date performance. Energy down 53%. Financials the second worst out of all of them. Your better performing area... Areas that are holding up a little bit, healthcare and consumer staples, not quite in bear markets year to date anyways, from highs they are. But so that's what you have there. Here's the kind of breakdown of that. I like sharing this with you guys because some of you are out there building portfolios, you're actively managing, doing whatever you're doing. And so I just, without giving suggestions, I'm just showing you, hey, energy's weak, financials, materials weak. You want something that's holding up at the moment, consumer staples, healthcare, and surprisingly technology. And that's because it had such an amazing gain to start the day. I think we're going to post this on Instagram a little bit later if you're interested in that. Okay, remember, the sector change, by the way. When you look at that weakness, the last time we saw weakness like that, year to date in March, the last time that we saw that was through the 2008 financial crisis. I want you to ask yourself, what happened a few years after that? What happened in the long term? Did everything turn out okay? Was it not an amazing rally there? Keep your mindset, keep your emotions about you, I should say, while you're investing out there. All right, sector breakdown. Let's go over to it. Here we go. Utilities, best performing area out of the mix today, defensive. Notice how that's the defensive area of the mix there. We go into consumer staples today, one of the better performing areas, 8.43% on the day. That's defensive in nature. So this rally didn't stand out. I mean, banks and financials were up today, okay? That's important. But this rally stands out because of the defensive names. That doesn't give you this warm, fuzzy feeling of, oh, we're all okay, we're going to go back. That's people moving money to the defensive area, not good. We're 10%, over 10% off of lows today. Some names that stick out in that category, General Mills. We happen to own this one, love it. Up 12% on the day, new 52-week highs as well. You can imagine that's on our list. Hershey's also holding up. Doing pretty good there as well. And Clorox was the other. Yeah, Clorox is the other one. 13% higher on the day in consumer staples. You go over to look at tech. So tech got a little bit of a bounce today, 6.8%. That's Intel. We talked about Intel already. Nvidia is another one off the 200-day moving average. And Texas Instrument, it's sort of a focused rally inside of tech right now. It's not a broad rally where everything is just tearing its way back to highs. It's a very focused rally, so be careful there if you're a stock picker. Healthcare, we talked about that being one of the better performing areas, not quite as far down from the highs there. In the space, if you're interested, CVS stands out. Just kind of stood out today as one of the better ones. And then Amgen, I think, was the other, up 10% back to the 200-day moving average. Also, not everything here is just ripping back to highs. It's a very focused, it's a great stock pickers market right now if you're into that sort of thing. I'm not saying it's profitable. I'm just saying it's more of a sort of a picking type market. All right, home builders were really weak yesterday, right? We named off some of the names yesterday. Today, hitting new lows again on the day. Home builders that are in this category, Lennar stand out as kind of weak on the day. And unfortunately, a name, Tempur-Pedic. These guys do the mattresses. You know Tempur-Pedic. 15% lower on the day. That's new 52-week lows, just getting beaten down there. Well, look at the price of gold. Gold's, hey, the end of its little losing streak there. There's an aggressive pullback on gold below the 200-day. Today, getting a little recovery. It had gained 2.6% on the day. And we got to wrap up with the price of oil here, making new 52-week lows. Crude oil now at $27 a barrel. $27 a barrel. You're kidding me, right? You seeing gas prices go down out there? I don't have it set here. I can't zoom out any further than that, but we'll have to take a look at oil and see where it's going there. Down 6% just today. All right, let's go over to some individual stocks today. We talked about Boeing getting their debt rating downgrade there. Very extended in the short term. I don't know how else to say it. Super, super extended in the short term. Amazon in the news today and did well. 7% gain on the day. They're hiring 100,000. That's not a typo. 100,000 people because of the demand of sales there. So Amazon sticks out. It really sticks out. Pepsi, 13% to the upside today. It was upgraded at Evercore as the ultimate defensive play. It's now down only less than 15% from highs. It is, now if you look at this stock, how far it is from its highs. This is the kind of way I looked at it. Where the stock is compared to its 52-week highs, compared to all the other major brands, Coca-Cola, Monster, things like that. This stock is the closest to its 52-week highs and fell the least from its 52-week highs. So hinting at a little bit of a strength there. If you want to broaden it out to the consumer staples category, there are only a few other stocks that exceed Pepsi, and naturally one of them is Clorox after a day like today, General Mills after a day like today, and I believe the other one was Hershey. No, it was Campbell's Soup. Got to be Campbell's Soup. There it is. Campbell's Soup, 9%. In the consumer staple space, these stocks outpace Pepsi in terms of, naturally, they're at their 52-week highs, but Pepsi is the seventh best one out of the group there, as measured by distance from the 52-week high. Just some fun looking at different data today. Had a little extra time. Believe it or not. ExxonMobil, 6.7% to the upside today. They are saying, this is another oil company saying significant cuts to their spending is coming, that more and more companies are saying this. And in fact, Chesapeake, was it? Chesapeake hired a bunch of debt restructuring analysts today to help them. They're in bad shape. That's one of those that can't really probably afford to pay those analysts, but that's what it is. Tesla says they've delivered their first Model Y SUV today. They didn't say to who. We don't know who. There was no real pictures or anything. And nobody really shouted from the rooftop that they got one, but they said they delivered their first one. Still down on the day, pretty much back to where we started before this whole entire mess, trading at $430. Good grief. We're covering a lot of stocks today. Marriott down 13% on the day. They're starting to furlough employees and they're not paying for them. So maybe government checks coming. I don't know what's going to happen there. Facebook, new lows, but then closed off lows. They're giving every one of their employees a $1,000 bonus to try to help them out during this time here. So that's Facebook. Well, what do we got? A couple more. Do we have a couple more? Guidance was a big thing today. A lot of companies said, we're taking away our guidance. We don't even know how to guide forward. This is such a mess. We don't know. Southwest Airlines was one of them. McDonald's was another one. Marriott was one of them. Nordstrom's was another one. Oop, nope, Nordstrom. There you go. That was another stock. They're just saying, look, we can't offer guidance. We're going to talk about earnings and revenue. That's all we can give you. We don't know how to guide forward through all this mess. It's kind of a new thing for them. So that's that one. If you look in the S&P 500, there were 4.5% of stocks above the 50-day. That's 100% bounce from yesterday. Small wins, right? 23 stocks in the mix there, twice as many as yesterday. Newmont, Eli Lilly, Walmart stick out as a few of them. If you want to take a look at those that were below and then closed above today to help sort of improve those numbers there. It's not great. I mean, I know I sound excited about this, but I'm just excited to do this stuff. You had 7 new highs today. That's the first time in 4 days that we've had any stock on a 52-week high list. We got 7 of them today. I'll point out a few. There's some of the same names. Kroger, one of them hitting new 52-week highs. WEC Energy has been one of those utilities that's done well in the space there. Citrix, oops, typed it wrong. CTXS is the magic name there. There you go. Had a good day today. I believe Citrix was upgraded on the day, and then General Mills, a couple standout names if you're looking for that relative strength there. 206 new lows. You just had some names kind of trying to claw back. They weren't all good today. There was a lot of down names in there, but in the space, we're looking for some sort of breath of fresh air, some sort of glimmer of hope, a shining ray of light. 13% on Maxim there that did hit new lows and recovered very sharply off those lows. Travelers Insurance hit lows. People said, nope, no, it's worth more than that. The stock up 13% on the day. Dish Networks is another one. You can see it hit new 52-week lows. People looking for the discount there. And Salesforce.com briefly hit 52-week lows and immediately snapped back, gave you a 9% rally on the day. Now, ideas around the market there. You've got a bloodbath in energy. Take a look at Chevron. Chevron, at this price, how far do you think you have to go back before you find a previous time in history where we traded at such a low price, low valuation? You've got to go back 10 years. ExxonMobil, even worse. You got to go back 15 years. This is a 15-year discount on this stock. I could probably do this all evening, just going through the different stocks that are discounted 8, 9, 10 to 15 years. Really impressive. This is obviously well overdone. Now, you're looking at stocks that are holding up. If we look over the last 10 years, this is kind of I want to explain it. If you look over the last 10 years, which stocks are holding near the lows of the 10-year range? Which stocks are holding at the highs, meaning they barely pulled back when we look at a 10-year window? Microsoft is one of those. Visa is another one. Johnson & Johnson, Walmart, all of those are still in the 80th percentile or better of their 10-year performance. So those would be, from a really long-term view, which stocks are holding up the best. That's a few of them. There's about 40 of them that I could go through. But I just want to point that out. Chevron and ExxonMobil are in the bottom 1 percentile because they're at their 10-year lows or just slightly below. So they're down there. Microsoft, Visa, Johnson & Johnson, Walmart up near the top there. So if you just, I don't know if you care about that. Interesting ways to look at things. FedEx, 5% higher. I believe it is up after hours just a touch. Did it float back down? Yeah, it's up a couple bucks after hours. They matched on earnings there. Nothing really exciting there other than them not totally just throwing in the towel. We talked about Facebook giving everybody $1,000, and that's all I have for you in terms of stocks there. Tomorrow, you have earnings from General Mills, Five Below, Guess, Tailored Brands, and Williams-Sonoma. You've got dividends. I'm going to just double check while I'm talking. You've got dividends coming out. Best Buy paying out 55 cents, and Legg Mason is still paying out 40 cents despite the buyout there. I think that's still going on. But that's what you have there in terms of earnings. I will take a shot, try to answer some of your questions here. I will see what I can do for you. You're going to get your government check and go to Disney. You're going to have to hold on to that check for a little bit, right? That's like my daughter. My daughter's sitting around. She's like, I got no school. I got no work. Well, let's go somewhere. I'm like, where do you want to go? I mean, you're welcome to come hang out here. But she's like, Mall of America, closed. Disney, Universal, closed. It's just stay at home. Yep. I love it. You think Ford and General Motors need a bailout? We'll see. That money they give away from the government is given. Will that be regular income or some other type of income? That's what's funny about it is if we don't offset it with some kind of tax break somewhere, aren't you really just, you're going to give it back anyways. I can't remember what it was like back when they paid out. I think we got $1,200 way back or $800 or something during the financial crisis. I actually can't remember how that all happened. I remember we got the physical check, but I don't remember. Yeah. If they don't pass any stimulus, they're going to pass something. It's not a matter of if they do or do not pass a stimulus bill. It's a matter of how big it is. They come showing up with 6, 7, 800 billion. Yeah, the markets are not going to like that. Anything over the 850 billion, that's what JP Morgan and I think it was Needham that was analyzing that. Anything over that, I think we get a positive response, but we'll see what happens. Yep. How risky do you see airline stocks, Delta and Southwest right now? Well, I mean, look, you can look at everything and say, look, that's a severe discount. I don't know that that's the bottom. That's the risk you take when you buy a stock that's falling like the way these are. I keep the same comments that I got from an analyst on Bloomberg. There's no need to be a hero, but there is a good reason to get in there and buy some of this stuff here while it's dropping here. We don't have to be a hero and, go refinancing the house and then putting it all down on black. You know what I mean? Yep. You like Microsoft, ExxonMobil, Disney, AT&T, and a REIT there for the long term. I don't know how that fits into everything else you're doing, but it's not like you're picking any real speculative type plays there. Do you think the stimulus will set a short-term bottom? I do. I think it will. Yep. Any sort of confirmation of actually doing something. Right now it's all talk, so we're not really. Maybe that's the reason why we held back today. There will be something. It's just a matter of how much it is. Yep. Yep. Can you play guess the Dow when the market will move less than 5%? Can you play guess the? I'm not sure what the question is there. Yep. I'm not going to get into that. I will say that the market falling the way it has, severe overreaction. And that's why I mentioned yesterday, there will come a time where there will be what I'll just define as a rip your face off type rally, where you blink and it's up here. Then you blink again and it's up here. And maybe Robinhood goes down again. TD Ameritrade pauses, right, because of the data. Everybody's trying to get in there and buy. It's going to happen. That's what we've set ourselves up for. You can look at it and you can just tell that's what's about to happen there. So I think one of the two reasons, if not both of them, will be the stimulus, a severe stimulus package from the government, or a decline in the number of virus cases. I think that will be one of the two things that gives you that blast your face off record rally day and into what will be more. We'll see. Yep. We started playing with some data on the dividend aristocrats there, just to look back in history through other financial crises. Maybe something we share with our on our closing our wine and wealth show, or as we've been calling it lately, whiskey and wealth, because we've needed something a little harder to get through the times here. Yep. Do you need to have taxable income to use your services? You have to have earned income to contribute to an IRA, Roth IRA. You don't have to have earned income to invest, right? If you choose to invest in something, that's fine. You just can't use the tax advantage vehicle like the Roth IRA to do that, if that answers your question. Yep. I hear you. American Water Tower, yeah, absolutely. Very much. REITs today did well across the spectrum there. A lot of relative strength there in the individual names. I went through a few of them, just having some fun earlier. I didn't get through all of them. American Tower was one that stood out. I think there was an upgrade there. But yeah, you're getting, you have a lot of that. That's defensive, by the way. That's not magic, right? That's just people being defensive, low rates. They figure weakness in the economy, high dividend yield. That's where they're going. Yep. That's true. It's Turnaround Tuesday, but we're hoping it's not like last week, right? I don't know if you remember. Turnaround Tuesday was fine, but Week Wednesday, or whatever you want to call it, Whining Wednesday or something, that was not very good there. Yep. All right, I'll wrap it up there. I do appreciate you guys coming and hanging out with us today. That's all I got for you. We'll be back tomorrow to cover this all over again. We'll see. Like today, again, it was quiet. It just felt like a real quiet day. I don't know that we'll have the same thing tomorrow, because I think we're going to have a lot louder voice out of Washington in terms of the specifics of their stimulus package. We'll see. So enjoy the rest of your day. If it helped you in some way, hit the subscribe button or check us out at jazzwealth.com. Appreciate it. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.